So your money's been working hard for you for a while, but now you want it back. Here's how you access liquidity in passive real estate investments. So if you're in a 3 to 5 year real estate deal, you may think your money's tied up for good, but it's not always true. Today, we're breaking down how accredited investors can tap liquidity after just a handful of months, ultimately through redemptions, note transfers, and smarter structuring. So the first thing you need to know when you're going into this and you're looking for liquidity is what type of structure you're in, what type of investment you're in. Is it a debt investment or is it an equity investment? The debt investments typically have greater ranges of flexibility for liquidity. Equities can be a little tighter, but we're going to go down that path in here in just a second. Redemption or repurchase windows. When you're signing up, when you participate in private real estate investments or private debt investments, you're executing a handful of documents. Those documents are outlining your redemption options, some of those being redemption or repurchase options. Many funds offer monthly or quarterly, or in some cases, annual liquidity options, but there are windows to do that. You've got to look at those documents to see what it indicates. Oftentimes, you have to provide notice 3 to 6 months in advance in order to get that liquidity. Miss it by a week, you may be sitting on the sidelines for another year. So you want to look at the documents that you've been provided to look for that. And then ultimately provides you direction about how to prepare that liquidity request or the redemption request. In some cases, there's a document that you have to fill out that's in there. In some cases, it's simply is providing notification to the sponsor, along with how much liquidity you're looking for. And another option is secondary transfers or note sales. What that means is you simply are selling the investment to someone else. And I know the first thing you may be thinking is, I don't know anybody else who would want to buy this. Well, oftentimes there are other investors invested in the exact same thing you're in who would like to buy more. And so some cases it's just as simple as reaching out to the sponsor, the person who put together the investment opportunity for you, and asking if there's other people that they know of who want to buy more. And in some cases, there definitely is. Accredited investor status matters here. Typically, when you're participating in these, you have to be an accredited investor. And so you make sure that if you're selling this to another investor, that they are indeed accredited. That must align with the documents that were provided in the first place. Another option is rolling capital within the fund. You can reinvest, but you may be able to reinvest into a shorter class. In some cases, there are tiers of investment classes, some cases longer investment tiers, in some cases shorter tiers. And this happens a lot on the equity or on the debt side of investment options. So you may be able to reinvest, but into a shorter class and end up with liquidity faster. The last thing I want to wrap this up with is planning next time. It's understanding the front end of investment, what those liquidity options look like, asking the questions of the sponsor so you know how you can build this into your portfolio. So liquidity in private investments, it's not impossible. Just take planning, take some structure. And if you want to learn how short-term real estate funds work, where you can have liquidity in 12 to 18 months, check out the link below in the description. I've dropped it there for you.